JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 10th of July 2020, so yeah, welcome everyone. Welcome to this Friday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as usual, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and well, click on the research tab right there on the top. Once it loads up, I'll show you. And that's the one that I'm talking about. It's a research tab, and like I said, it will take you to this page, which I believe you can find useful. Now then, a quick update on what's happening here globally. Now, according to some resources, other resources, we had a spike. Yesterday we've hit the record, and as I was talking about in the beginning of this week, and previous week as well, basically it seemed that every Friday we used to hit an all-time high or something like that, but this time it was Thursday, and this is kind of cautioning us a little bit. So yeah, like I said, the figure has risen sharply. The number here, which you can see on the screen, is the 12,200,000 and almost 17,000. However, some other resources suggest that the figure is a little bit more than that. It's roughly around the 12,400,000. So yep, and like I said, showing a daily spike in total amount of infected at around 222,825. So basically that's a new record. Now let's have a look at what's happening with the markets. Now the first one I want to touch on here is the Shanghai Composite. Today the index is running in the red a little bit. So after it reached this 3,457 territory, the index kind of retraced back down, and today it kind of is still failing to reach this yesterday's high. So let's see where this index is going to end, but to be honest, it seems that there is a good chance that this could end in the red today. So but however, don't get me wrong, this could still be seen as a temporary correction, because overall the market is strong for now. But in a way, like I said, we could see this one drifting back down. Now, this is probably where we can draw a possible Fibonacci retracement. I have drawn this one in the beginning of this week, but the index continued to rally. So if, for example, this has been the peak, and today, for example, we're now going to get another push towards this 3,457 territory, then maybe we could see a bit of a correction here to the downside. Initially we'll aim for this 3,336 territory, marked by the high of the 26th of February, and also marked by the highest point of March 2018. So yep, this could be a nice target. Slightly below that, we do have that 23.6% retracement on the Fibonacci. So in a way, like I said, this we'll consider such a move if we don't get another let's say test of this 3,457 territory. Now Again, this move lower could still be seen as a temporary correction, because as you can see, we're still hanging above this upside support line taken from the low of the 19th of March. And in a way, well, technically speaking, I mean, we could even say that as long as it remains above this upside line, still the outlook remains positive. So even we have a strong move back down here, well, the bulls could still jump in somewhere around here. But again, for now, let's not over speculate on this one too much. Let's first see how all this is going to play out, and if this index is going to go for a larger correction to the downside. Now, jumping into Nikkei, Nikkei is already closed, and it closed in the red, and the most important is that it closed below this little short-term upside support line taken from the low of the 15th of June. Of course, this is not really a great sign for Nikkei, as it increases the chances of a drift lower. However, if this does move to the downside, in a way it could come in line with the idea of maybe seeing that little correction, and in a way, yes, we could consider some lower levels here in the near term. However, to get a little bit more comfortable with larger extensions to the downside, well, preferably we would like to see, and let me just grab an arrow, preferably we would like to see a drop below the 21,530 territory right here, because such a move would confirm a forthcoming lower low. It would place the price below the low of 15th of June, or in other words, the lowest point of June, and then yes, lower levels could be met. Until then, if this does travel lower here and tests these levels, if it finds a hold up somewhere near this lowest point of June, this is where, I mean, the index would still remain above the 200-day EMA, which some bulls could see as a positive, and some maybe they could try to enter the kind of enter into the field again somewhere here near this 200-day EMA together with the 100-day EMA. But if that gets broken, as I said, this is where the bulls could step away a little bit and allow the bears to dictate the rules. But again, for now, guys, from the very short-term perspective, keep your eyes on this upside line. If the price continues to balance below it, then yes, we could see a bit of a decline here. Now, the German DAX, similar story. Yesterday it closed the trading session in the red. Now, although yesterday I was talking about this one, and I was telling you guys that, well, actually at the time, when I was talking about this one, we were still hanging in the positive territory. However, as you can see, by the end of the day, the index drifted to the downside, and ended the day in the red. So in a way, there is a possibility for this one to drift further south, and but further south only up until this upside support line taken from the low of the 19th of March. So in a way, this move to the downside here could be still seen as a temporary correction before another leg of buying, because the bulls could step in somewhere near this upside line and drive this one up again. If you're more on the cautious side, you could just wait for a push above the highest point of June here near the 12,913, and then aim for higher levels, because such a move would confirm a forthcoming higher high. Now, the FTSE 100. Now, this one is a little bit worse than other indices, because of course, not only that it is kind of also getting affected by the whole kind of surge in the coronavirus cases, but also the pound, the British pound is slightly on the stronger side. So this is also kind of weighing in on the negativity here. So yep, for now, what we could do and how we could play this one out is that if the index starts moving below the 6,000 territory here, somewhere around here, then yes, lower levels could be met. And as I mentioned yesterday as well, keep an eye on the 5,961 territory here, which acted as a good support, and a nice good break below this, yep, would confirm a forthcoming lower low, and further declines could be possible. But again, looking at the cash index where it's currently balancing at, you can see that the price is not far from the the 6,000 mark. So we'll, like I said, we'll keep a close eye on it, and if we do see a drop below that psychological 6,000 zone, then yes, slightly lower levels could be met. In terms of the upside, we would need to see this one pushing back above the 6,342 territory before kind of, let's say, considering some upside. Gold. Now gold is quite interesting as it is now declining. So yesterday it closed in the red. Today it's continuing to push lower. However, this is what I was talking about previously, that as long as it stays above, as long as the price remains above this upside line taken from the low of the 5th of June, yes, there is still a chance for this one to drift higher. Now, even if we do see a break of it, like we had it here, for example, last week, still we would prefer to see a daily close below this upside line first before, let's say, aiming for further declines. Now here you can see that the price is already falling, but it still remains above this upside line. So even if we see a strong move, let's say, to the downside here, wait for that daily candle to see where it's going to end the day, because if it's still going to get pushed back above this upside line, then maybe the bulls are not ready to give up yet. You can see that this week we have had a test of this 1818 level, so in a way this is going to be the barrier that we're going to be keeping a close eye on today and next week. So the 1818 level, a break above that would kind of confirm a forthcoming higher high, and yep, then we could start aiming for those much higher levels. But again, for now, we're very careful. The commodity is drifting back below that psychological 1800 zone, but still remains above the 1796 territory, which is the near the highest point of 2012. WTI oil. So this one has drifted south, and yep, it failed to move above this 41.61 territory that I kept talking about this whole week, and the commodity drifted lower. However, it still remains above the 21-day EMA, which, as you can see, historically kind of acted as a good area of support. So if such an activity will remain here, if this trading activity, the main trading activity, will remain above this 21-day EMA, then yes, we could see maybe a reversal and a push higher. But still, given the situation, we'll wait for that confirmation break above the highest point of June first, near the 41.61 level, and then yes, aim for higher levels, because at the same time the price would be placed above the 200-day EMA, and yep, more buyers could see this as a good opportunity to step in. But in terms of the downside, well, if we do see a strong move below the 21-day EMA, yes, this could kind of open the door towards lower levels. However, preferably a drop below the 37.10 zone could do the trick here for more sellers. Ripple, quick update on Ripple. So I talked a lot about Ripple this week, and basically after kind of popping higher on Wednesday, and yesterday it kind of drifted further north, but found resistance near the 200-day EMA. As you can see here, this line acted as a fantastic area of resistance from where the crypto started drifting lower and correcting lower, and is now and today, for example, it tested this downside line taken from the high of the 30th of April. So they tested it from above, of course, which I was mentioning previously, because I was also saying that if this this downside line could act as a nice trampoline for this crypto, and we could see something like this here. So this is basically for now working out nicely according to the plan, according to this arrow which I've drawn yesterday, and in a way, if this downside line does continue to provide support, yes, a nice push higher could be possible again. So keep your eyes on this one, guys. It could be quite interesting. In terms of the downside, we would need to see a drop below the 0.1743 territory first before aiming for lower levels. Now USD CAD. Now here you can see that the pair is pushing higher, and understandably, because oil is drifting to the downside, and yep, that's weighing in on the Canadian dollar. And right now, basically, we're still going to remain very careful here, because You can see that, for example, yesterday when I talked about USD CAD, I was telling you guys to keep a close eye on this little barrier, the 1.3488. It was very close to it, but as you can see, it once again it acted as a strong area of support. It didn't break it, and yep, the pair reversed higher. Today we're seeing a continuation move to the continuation move north, but in a way it could continue moving in that direction, especially if it climbs above this little barrier here, the 1.3624 territory, 24-25 zone, marked by the high of the 2nd of July. A nice good push above it. Yep, could open the door towards these slightly higher levels, but let's not forget that overall the pair is still below this downside line taken from the high of the 31st of March, and in a way it could get a hold up somewhere near this downside line. So initially, like I said, we'll target that. Now GBPUSD, now this is where the interesting bit comes in. So yep, you can see that the dollar is rising against the Canadian dollar, and in general the dollar is kind of strengthening a little bit right now. You can see here, especially by the on the GBP USD pair. And yesterday when I was covering this this pair, I was telling you guys that keep your eyes on some of these levels, like for example this little intraday swing low here of the near the 1.2707, because if the pair travels higher but finds resistance somewhere around here and then starts drifting lower, we could be getting ourselves a possible descending, sorry, not descending, but a possible triangle formation here, which means that in a way the pair might be coiling up here for quite a while, and that's why we'll probably be waiting for a break above one of these levels first, one of these lines first, before kind of, let's say, considering the next directional move. So this is what like I said, this is what I was mentioning in my yesterday's video, and like I said, now you can see that for now it seems like it could be working out exactly like that, but again, let's not rush into anything yet. If the pair by any chance reverses sharply to the upside and breaks this downside line and breaks above yesterday's high, then near the 1.2669, then yes, of course, higher levels could be met. We could start looking at levels like the 1.2813 or even for above that. But again, for now, let's be on the safe side. And if the pair starts moving back below the 1.2543 territory right here, well, this could lead to some declines here, maybe towards even going back towards this upside support line taken from the low of the 18th of May. Jumping into EURJPY, so this week I talked about this pair, and I was telling you guys to wait for that confirmation break above the 122.11 zone in order to get a little bit more comfortable with higher levels, because that's what I was also saying, don't rush into this yet, because although yes, we were still trading above this upside support line taken from the low of the 7th of May, we needed that confirmation break above this barrier first in order to kind of aim for higher levels. We didn't get that. We came close to kind of to that level, but we didn't even get a test of it. And as you can see, this is exactly what's happening now. And my alternative scenario is working out so far. So we had a break of this upside line, and another thing is that the rate is now trading below the low of this 3rd of July. Marked near the 120.61 zone, and you can see that the pair continues to drift comfortably to the downside. Now our next target is around the 200-day EMA here, which is roughly around the 119.90 zone, somewhere around there. So yep, that's going to be our main target for now. Of course, we do have another good level here near the 119.04 territory, but we'll leave that one for a little bit later, because like I said, we don't want to rush into this into anything yet. So we'll keep an eye on this 200-day EMA first. And then in a way, the same scenario for the upside remains valid. We need to see a push above the 122.11 zone first before kind of examining higher levels. For now, it seems that the upside could be slightly off the table, because also the markets are drifting to the downside. So the equity markets are correcting lower, so which is kind of increasing the demand for the safe haven yen. And finally, EURUSD. So here, the safe haven dollar as well, is also pushing this pair lower. So yesterday, in my excuse me, guys. So yesterday in my traders tea time, we were balancing near this level here, near the 1.1353, and I was telling you guys, wait for that daily close. Yes, I was more positive then because we were still hanging slightly fractionally above that 1.1353 level, but we didn't. What I was also saying, wait for that daily close. At least above that barrier in order to kind of aim for some higher levels. But as you can see, we didn't get that daily close, and yep, the pair drifted lower, and it's now moving towards this downside line taken from the high of the 10th of June. So let's see if we'll get something similar as we had here on Ripple, if this downside line could act as a nice trampoline, and if it does, we may see a nice rebound and a push higher. So by the way, this area also kind of this is the daily chart, and this area by this downside line also kind of coincides, the potential level here coincides with the 21-day EMA. So in a way, it kind of we could see a possible test of this area. Now in terms of the downside, well, again, I'll stick to the same idea that I kept talking about. We need to see a drop below the 1.1168 territory right here before we could consider some lower levels. So now that's why, guys, for now, yes, it is drifting lower. Keep your eyes on this downside line and this 21-day EMA. Let's see if the 21-day EMA provides support as it did last time here in the end of June. If it does, we may see a nice rebound and a push higher, but still the more comfortable level, after a break of which we could consider some higher areas, still remains the 1.1353 level. And in addition to that, a nice daily close could do the trick here for more buyers. So wait for that, guys, and don't rush into anything yet. So guys, I really hope you found it useful, and thank you very much for watching and listening. If you want to catch my video later on, my trader's tea time is always 13:15 GMT. But for now, guys, I hope you have a wonderful trading day. Don't forget that today's Friday. Don't overtrade. Be safe, both health-wise and market-wise. And like I said, yep, catch my video later on, my trader's tea time, 13:15 GMT time. Thank you very much, and bye-bye.